David, I'd like to ask you, first of all, how surprising is the current landscape for UK government bond borrowing? Are we in territory that market participants have never imagined before?
I would say, thank you, Toby, it is very surprising. At the start of the year, we envisaged that fiscal policy would be handed the baton from monetary policy, albeit from a Brexit-induced recession at some point. Now, we weren't necessarily specifying when. However, we've been surprised, first of all, by the instance of fiscal policy taking place quite sooner, and also the depth to which it has occurred. And so the environment in which we find ourselves is certainly quite surprising, I would say, and it makes us think, I guess, beyond in terms of what the market is pricing in, with yields having fallen spectacularly. We had a negative yielding gilt out last week, and it sort of makes you wonder what the market is pricing in going forward, and or whether the assets that we think have always been safe haven are indeed so going forward. When I look at a 30, 40-year gilt yielding less than 0.5%, I have to ask myself what that is pricing in. And I guess having seen this in a sort of setting whereby quantitative easing has continued quite substantially over the last decade, to see this situation where quantitative easing is taking place in tandem with fiscal expansion does raise a few concerns from us. And I would say it is quite unique and definitely quite surprising to not just us, but to the rest of the market as well.
And is the COVID crisis likely to make issuance of UK green bonds or even social bonds more likely or less?
I would say more, and the reason being, of course, there's been spectacular growth in green bonds over the years, and those have definitely grown from obscure instruments to now what you think are mainstream. What you've had in the social bond space, for instance, has been a very fast acceleration. You could say that's been precipitated by the COVID-19 pandemic. But what you're having in terms of the bailouts that are being provided to companies, for instance, is they are attaching certain themes that are not necessarily just environmental, i.e. in reducing your footprint or making yourself more efficient. They are also going that bit further, whether that's governance in terms of remuneration, or executive pay or bonus payments for that matter, but they're also incorporating social aspects. So you had a recent World Bank Sustainable Development Bond issuance focusing on health and well-being. So the other aspects of the ESG, ESG being environmental, social, and governance, are being looked at a lot more post the COVID pandemic. And I believe that that trend will continue quite strongly going forward. Whether that's via governments, and indeed we have been urging the UK government to issue similar, if not targeted instruments, or via companies themselves. But I think the market is ripe for this sort of issuance because the projects are there as highlighted by the health crisis. And so the projects need funding of which can come from places like social bond issuance.